Unlocking IAS 16, a journey through property, plant, and equipment. Introduction. Welcome to our presentation on International Accounting Standard 16, IAS 16, Property, Plant, and Equipment. Property, plant, and equipment are significant assets for most businesses. Accurate accounting ensures transparency and reliability in financial reporting. For instance, a manufacturing company's machinery, a construction company's buildings, and an airline's fleet of aircraft are all examples of property, plant, and equipment. IAS 16 standardizes the recognition, measurement, and disclosure of these assets, enabling comparability across entities. Objective of IAS 16 is to prescribe the accounting treatment for PPE, ensuring their value is represented accurately in the company's financial statements. To ensure that stakeholders can trust the reported financial position of a company. Scope includes tangible assets used in production, rental, or administration. Examples include factories, office buildings, machinery, and vehicles. The standard specifically excludes assets governed by other standards, for example, investment property that is governed under IS 40 and agricultural assets that are governed under IS 41. Let's move forward. Part 1, Recognition and Initial Measurement. The property, plant, and equipment. The basic features are it's held by an entity and it's held for more than 1 year. It can be either a factory building, asset given on rent, or any administration building or block. IE 16 outlines the criteria for recognizing property, plant, and equipment as assets and how to initially measure them. Let's consider a practical example. XYZ Corporation purchases a new delivery truck for $50,000. According to IE 16, XYZ recognizes the truck as property, plant, and equipment when it's probable that future economic benefits will flow to the entity, such as the ability to make deliveries efficiently. The cost of the truck includes not only the purchase price, but also any direct costs incurred to get the truck ready for use, such as delivery charges and installation fees, etc. Recognition of property, plant, and equipment. An item of property, plant, and equipment is recognized in the financial statements of the entity where it is probable that future economic benefits are more likely to be flown to the entity. That is, it's likely that the asset will contribute to the future cash flows of an entity. Example, a machine installed in a factory to produce goods. And the cost of the asset can be measured reliably. The asset is measured at initial cost plus subsequent cost. Initial measurement of property, plant, and equipment. The initial measurement includes cost is equals to purchase price. Purchase price includes taxes, import duties, and non-refundable VAT, and it excludes discounts and rebates. Plus, a directly attributable cost. It includes delivery and transportation fees, installation and setup costs, testing to ensure the asset works correctly, such kinds of cost, and legal fees for asset acquisition. Plus, removal cost means dismantling or restoration cost, obligations to restore the site of installation, example, decommissioning of a factory. Cost will be treated as cash price equivalent in case payment is deferred or asset is acquired in exchange for another non-monetary asset. Let's see some practice questions. According to IE 16, when should property, plant, and equipment be recognized as assets? when purchases discount, when it's probable that future economic benefits will flow to the entity. Option C, when the asset is fully depreciated. The correct answer is option B, when it's probable that future economic benefits will flow to the entity. Second question, what is included in the initial measurement of property, plant, and equipment PPE? A. Fair value. B. Purchase cost. C. Replacement cost. The correct answer is option B. Purchase cost is included in the initial measurement of property, plant, and equipment PPE. Third question, which of the following costs is not included in the initial measurement of property, plant, and equipment? Option A, purchase price. Option B, direct cost. Option C, repair and maintenance cost. The correct answer is option C, repair and maintenance cost. Since purchase price option A and direct cost option B both are included in the initial measurement of property, plant, and equipment PPE. Part 2, subsequent measurement. After initial recognition, property, plant, and equipment are accounted for using either the cost model or the revaluation model. In cost model, asset is carried at cost less accumulated depreciation and accumulated impairment losses. Example, machinery purchased at initially cost of $200,000 and is depreciated annually based on the acquisition cost. Revaluation model. In this case, asset is revalued periodically to its fair value. Under the revaluation model, assets are carried at a revalued amount, being the fair value at the date of revaluation, less subsequent depreciation and impairment, provided that fair value can be reliably measured. Revaluations should be carried out regularly under the revaluation model to ensure that carrying amount of assets does not differ materially from their fair value at the balance sheet date. Any increase resulting from revaluation is credited to other comprehensive income, while any decrease is recognized as an expense to the extent it exceeds any previous revaluation surplus. Upon disposal, any revaluation surplus may be transferred directly to retained earnings without passing through profit or loss. Part 2, subsequent measurement. Subsequent measurement of property, plant, and equipment. Subsequent measurement can be done either on cost or on revaluation model. In case of cost, as we have gone through, cost model is equal to cost minus accumulated depreciation and accumulated impairment losses. In revaluation model, it's fair value minus subsequent accumulated depreciation minus subsequent accumulated impairment losses. Subsequent measurement. For example, ABC Corporation owns a building that is initially recognized at a cost. Over time, the fair value of the building appreciates significantly due to becoming real estate prices, booming real estate prices in the area. Under the revaluation model allowed by IAS 16, the company can choose to revalue the building to its fair value, capturing the increase in value. This demonstrates the flexibility of the revaluation model in reflecting changes or adapting to the market conditions. So let's see some practice questions. Which model under IAS 16 allows assets to be carried at fair value? Option A, cost model. Option B, revaluation model. Option C, replacement model. And the correct answer is option B, revaluation model. Question number 2. How are assets accounted for under the cost model? Carried at fair value, carried at cost less accumulated depreciation, carried at net realizable value. And the correct answer is option B. The assets are accounted under the cost model at cost less accumulated depreciation. MCQ number 3. What is the requirement of the revaluation model under IAS 16? Revaluations must be done annually. Revaluations are optional. Revaluations are prohibited. The correct answer is option A. Revaluations must be done annually. Let's move on to the third part, depreciation. IAS 16 prescribes the method, useful life, and residual value for calculating depreciation of property, plant, and equipment. Depreciation is the systematic allocation of an asset's depreciable amount over its useful life. The depreciable amount is calculated at cost less residual value and is allocated systematically over the asset's useful life. Residual value and useful life are reviewed annually. The chosen depreciation method should reflect the pattern of the asset's economic benefits consumption and it should be reviewed annually. Depreciation is charged to profit or loss unless included in the carrying amount of another asset and commences when the asset is available for use, continuing until derecognition, even if the asset is idle. Depreciable amount is cost minus residual value, whereas useful life is how long period and number of units on which the asset should be depreciated, and it should be depreciated on a systematic basis over its useful life. Common depreciation methods include straight line method, which eventually distributes the cost, the diminishing balance method, which applies a higher depreciation rate in the early years, and the units of production method, which bases depreciation on actual usage. An airline company uses the units of production method to depreciate its aircraft. This method aligns with the company's business model as depreciation is tied to the actual flight hours of each aircraft, reflecting the wear and tear incurred during operations. So each company can use different methods for each class of assets depending on its economic viability. Let's consider an example. DEF Enterprises owns a fleet of vehicles used for delivery services. To calculate depreciation, DEF uses a straight line method which evenly spreads the cost of the vehicles over their estimated useful lives. For instance, if a vehicle is expected to last 5 years and it has a residual value of 5,000, DEF would depreciate the vehicle by 9,000 per year. That is cost minus residual value divided by useful life to become the depreciable amount to be depreciated equally over the useful life of the asset, and it will reflect the wear and tear incurred during its usage. Let's see some questions. Which depreciation method evenly allocates the asset's cost over its useful life? A. Straight line method. B. Diminishing balance method. C. Units of production method. And we have studied that it's the correct answer is option A. Straight line method. Since it allocates the asset's cost over its useful life on an even basis. Question number 2. Which of the following factors does not influence the choice of depreciation method? A. Assets age. B. Assets residual value. C. Economic environment. And the correct answer is option C. Economic environment. Since the other two, that is option A, assets age, and option B, assets residual value, influence the choice of depreciation method. Moving forward, part 4, useful life and residual value. Useful life is influenced by expected usage, that is, production hours, wear and tear from operational use, technological advancements, or market trends. For example, a computer typically have a shorter useful life due to rapid technological changes. Residual value Residual value is an estimated amount recoverable at the end of an asset's useful life. Example, Delivery vehicles may have a higher residual value if there is strong secondary market. Let's see the question answers. How often should an entity review the useful life and residual value of an asset? A quarterly, B annually, C biannually. And the correct answer is option B, annually. Part 5, Derecognition. Assets are removed from the statement of financial position upon disposal or when no future economic benefits are expected from the asset. In this case, gain or loss is calculated by subtracting carrying amount from disposal proceeds. For example, a machine with a carrying amount of $30,000 is sold for $25,000. So it has been a recognized loss of 5,000 in the statement of profit and loss. Derecognition of property, plant, and equipment is done in two scenarios, that is, on disposal or when no future economic benefits are expected from the asset. So, on disposal or when no future economic benefits are expected, gain or loss is calculated. Gain or loss is calculated in such a manner that net disposal proceeds minus carrying amount. Let's see some questions. When should an asset to be removed from the statement of financial position according to IAS 16? A. Upon acquisition. B. Upon disposal or when no future economic benefits are expected. C. Upon revaluation. The correct answer is option B. How is the gain or loss on disposal of an asset calculated under IAS 16? A. Difference between cost and fair value. B. Difference between proceeds and carrying amount. C. Difference between book and market value. And the correct answer is option B. Difference between sales proceeds and carrying amount of the asset is the way to calculate the gain or loss on disposal of an asset as per IAS 16. Disclosure requirements of IAS 16. So the key information to disclose are carrying amounts for each class of property, plant, and equipment (PPE), depreciation methods and rates, gross carrying amount and accumulated depreciation, and revaluation surplus or deficit if applicable. Additional disclosures include the existence and amounts of restrictions on property, plant, equipment, and any commitments for the acquisition of property, plant, and equipment. So, to conclude, IAS 16 provides a robust framework for accounting for property, plant, and equipment, ensuring transparency and reliability in financial reporting. By understanding the theoretical underpinnings, measurement models, depreciation methods, and disclosure requirements of IAS 16, entities can effectively manage their assets and communicate their financial position to stakeholders. Let's see some practice questions. Question number 1. Which of the following is the main objective of IAS 16? To determine the fair value of financial instruments, to prescribe the accounting treatment for property, plant, and equipment, to establish principles for recognizing revenue, to provide guidelines on the consolidation of financial statements. And the correct answer is option B, to prescribe the accounting treatment for property, plant, and equipment. Question number 2. Under IAS 16, which of the following costs should be included in the initial measurement of an item of property, plant, and equipment, EPE? A. Cost of site preparation. B. Administrative and general overhead costs. C. Advertising and promotional cost. D. Initial operating losses before the asset achieves planned performance. And the correct answer is option A. Cost of site preparation. Since the remaining options, option B, C, and D, does not qualify to be the part of the cost of the asset. Question number 3. Which of the following methods is not permitted by IAS 16 for subsequent measurement of property, plant, and equipment? A. Cost model. B. Revaluation model. C. Fair value model. D. None of the above. And the correct answer is option C, fair value model. Since A cost model and B revaluation model are permitted by 16 for subsequent measurement of property, plant, and equipment. Question number 4. When is an item of property, plant, and equipment recognized as an asset under IAS 16? A. When it is acquired. B. When it is paid for. C. When it is probable that future economic benefits will flow to the entity and the cost can be reliably measured. D. When it is used in the production process. And the correct answer is option C, where it is probable that future economic benefits will flow to the entity and the cost of the item can be reliably measured. Question number 5. Which of the following is true regarding the revaluation model under IAS 16? Option A. Revaluation should be carried out annually. Option B. Revaluation increases are always recognized in profit or loss. C. Revaluation decreases are always recognized in other comprehensive income. Option D. If an item is revalued, the entire class of asset to which that asset belongs should be revalued. And the correct answer is option D. If an item is revalued, the entire class of assets to which that asset belongs should be revalued. Question number 6. What is the impact of depreciation under IAS 16? Option A. Depreciation is charged to other comprehensive income. Option B. Depreciation reduces the carrying amount of the asset. Option C. Depreciation increases the fair value of the asset. Option D. Depreciation has no impact on the financial statements. The correct answer is option B. Depreciation reduces the carrying amount of the asset. Question number 7. What should be done if the cost model is used and a part of an item of property, plant, and equipment is replaced? Option A. The cost of the new part should be expensed. Option B. The carrying amount of the replaced part should be de-recognized. Option C. The asset should be revalued. And option D. No action is required. And the correct answer is option B. The carrying amount of the replaced part should be recognized. Question number 8. Which depreciation method is not allowed under IAS 16? Option A, straight line method. Option B, units of production method. Option C, reducing balance method. Option D, revenue based method. And the correct answer is option D, the revenue based method. Since the first three methods, that is straight line method, units of production method, and reducing balance method, are allowed under IAS 16. Question number 9. Under IAS 16, what must be done when an asset is de-recognized? Transfer the asset to inventories, recognize any gain or loss in other comprehensive income, remove the asset from the statement of financial position, or option D, continue to depreciate the asset. And the correct answer is option C. When an asset is de-recognized, it should be removed from the statement of financial position. Question number 10. Which of the following disclosures is required under IAS 16 for each class of property, plant, and equipment? A. Details of future planned acquisitions. B. Gross carrying amount and accumulated depreciation. C. Market value of the assets. D. Replacement cost of the assets. And the correct answer is option B. Gross carrying amount and accumulated depreciation. So, IAS 16, to conclude, IAS 16 establishes a robust framework for recognizing, measuring, and depreciating and de-recognizing property, plant, and equipment. Proper accounting for property, plant, and equipment ensures accurate financial reporting and better decision making for stakeholders.